Good morning. Welcome to your daily Solo 401k webinar and Q&A session with my Solo 401k Financial, where we help you to stop overpaying taxes and start building real retirement wealth. So today's topic is the Mega Backdoor Roth and Fidelity Solo 401k, the critical deadline for sole proprietorships as well as LLCs taxed as a sole proprietorship. We've been doing a series of these types of webinars here in 2025. You can always visit our YouTube channel to view those past recordings, and we're going to be continuing to do other similar webinars. So this is your chance to get answers. Use the chat to ask questions now regarding this topic or anything else for that matter, whether it's self-directed IRAs or any aspect of solo 401k plans. Type them over now so that we can be sure to get to them all. So, of course, before anyone can consider the Mega Backdoor Roth strategy, using a solo 401k from my solo 401k Financial, and then using Fidelity Investments to hold the funds for the solo 401k that we offer, you need to make sure you're self-employed. As the word solo implies, a solo 401k is for solo business owners. In short, it's for an owner-only business that does not employ any non-owner full-time W-2 employees who work 1,000 hours or more in your business. And you typically have to apply that test to all your other businesses. So if you own multiple businesses and any of those businesses employ any non-owner full-time W-2 employees, with the exception of your spouse, then that would preclude you from being able to open a solo 401k plan. You can always exclude anyone who's under age 21, regardless if they work 1,000 hours or more or less. And you can always exclude contractors from your plan as well. Of course, today we're talking about sole proprietorships and LLCs taxes and sole proprietorship. So don't confuse that exclusion of contractors, because many individuals are self-employed as contractors and they qualify to open a solo 401k plan. That exclusion has to do more if you have a business and you employ other contractors. You can always exclude those anyways, but you can always open a solo 401k if you're a contractor, as long as you don't employ any non-owner full-time W-2 employees in your business who work 1,000 hours or more. Looks like we've got a question here. If I open a solo 401k, what documents do I need to file with the IRS this year and each year thereafter, and who drafts them? Great question. So a solo 401k plan is established by signing the solo 401k legal plan documents. A solo 401k is a retirement trust. Therefore, it's a separate entity. It's a separate legal entity that has its own plan documents. It also requires its own separate employer identification number. Yes, you heard that right. You cannot use your business EIN and you cannot use your social. The solo 401k will have its own separate employer identification number issued by the IRS in the name of the solo 401k plan. And as part of the setup process, we will obtain that EIN number for the plan. We draft the plan documents. Those are the ones you need to sign. And when you sign those plan documents, that establishes the plan. As far as updates to the plan, that's what we're here for. As the solo 401k plan provider, we'll process all required IRS plan updates, from interim amendments, good faith amendments, to full-blown amendments. There's other reporting that has to transpire within the solo 401k plan as well, depending on what transpires. Let's talk about some of that. Let's skip to that since you brought up a good question. So here's some good information here. So here is my solo 401k Financial. Not only are we solo 401k plan document providers, but we also will handle ongoing compliance reporting for your plan upon your timely request. You need to request these services because we never have access to your funds, specifically a Form 1099-R. That applies when you process a distribution or a conversion, such as the Mega Backdoor Roth conversion. That requires the issuance of a Form 1099-R. We'll go ahead and issue that for you at no additional cost and file a copy with the government as well. That'll be covered in our annual fee. but you need to timely request that because we don't have access to your funds. As a matter of fact, a lot of our clients use Fidelity, Schwab, Altruist, their local bank to hold the solo 401k funds. And that's why they use our services, because they get to choose where they hold the money at. What is more, they like the fact that we don't need to have access to their funds to help them keep their plan in compliance, including this type of reporting. Another reporting item is Form 5500 Easy. It's an informational return that applies once the market value of the full solo 401k plan is greater than $250,000 as of the end of the year. We'll go ahead and file and prepare that with the government for you as well. We'll file it electronically, but you need to timely request it. So if the value of your solo 401k plan, for example, is over $250,000 in market value as of December 31st of 2025, a Form 5500 Easy will need to be filed by July 31st of 2026. So make sure to notify us so we can get that prepared for you and add you to our list of annual preparation. So good question. All right, we'll come back and look at some more questions here in a moment. In the meantime, let's continue with today's main topic, which is the Mega Backdoor Roth Solo 401k deadline, where you can use Fidelity investments to hold the Solo 401k funds for the plan that we offer that allows for the Mega Backdoor Roth Solo 401k strategy. Let's talk about the deadline to get that going. Here we are on December 3rd of 2025. So you still have plenty of time to set up the Solo 401k plan for tax year 2025. And setting up the plan is very easy. All you have to do is sign the plan documents. That's right. The plan documents that we draft for the Solo 401k, aka retirement trust. Those are legal documents, and it's when you sign those documents, they determine when the plan's effective. It's not when you make contributions or when you open up the brokerage account at Fidelity or any other brokerage firm that you may want to use. So why does this matter? Well, a lot of clients like to use the Mega Backdoor Roth to get more Roth funds indirectly into their solo 401k plan up to the overall limit for the year. And we'll talk about that here in a moment. So while Fidelity's own solo 401k plan does not allow for the Mega Backdoor Roth, Fidelity will provide what they refer to as investment-only company retirement brokerage accounts for a self-directed solo 401k offered by my solo 401k financial that allows for the Mega Backdoor. And we'll help you open up those brokerage accounts at Fidelity as part of the Mega Backdoor Roth setup. So in short, a solo 401k plan for my solo 401k financial is considered a custom solo 401k plan that has all the bells and whistles. You can perform the Mega Backdoor Roth. You can invest in alternative investments like real estate, cryptocurrency, private placements, promissory notes, tax liens, the list goes on, in addition to equities. It also comes with a $1,500 auto contribution credit, so the cost of opening and maintaining a solo 401k plan is effectively subsidized by good old Uncle Sam for years to come. So the deadline for voluntary after-tax solo 401k contributions. So the good news is that if you're listening to this webinar on January 1st or after of the year 2026, the good news is you still have time to open a solo 401k plan to utilize the Mega Backdoor Roth strategy. Obviously, if you're listening to this webinar live here on December 3rd, 2025, you still have plenty of time as well. So if you want to be able to utilize the Mega Backdoor Roth Solo 401k strategy for tax year 2025, you don't have to open the plan by December 31st of 2025. You actually have until April 15 of 2026. And if you file a business tax return extension for your sole proprietorship, so Form 1040, you're going to have an extra 6 months. You're going to have until October 15 of 2026 to both open the solo 401k plan for tax year 2025 and make voluntary after-tax solo 401k contributions for tax year 2025. So again, there's no need to procrastinate though. If you're listening to this webinar now, go ahead and open the solo 401k plan now here in December so you don't forget about it. But it's good to know that if you do want to procrastinate, that you have until next year in 2026, by April 15 of 2026 or October 15th of 2026 to open and make contributions for tax year 2025. That's if you want to make voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth. Now, as I stated at the beginning of the webinar, we've done other webinars on different deadlines. So we're not going to talk about the employee contribution deadline, but let's just talk about it at a high level. If you want to be able to make employee contributions, so we're not talking about voluntary after-tax solo 401k contributions. We're talking about employee, that 23,500 salary deferral limit for tax year 2025. You're going to need to open the solo 401k plan by April 15 of 2026 and also make the contribution, the employee contribution, by April 15 of 2026. So make note of that. But again, we're honing in on the Mega Backdoor Roth solo 401k strategy today. So Fidelity and a custom solo 401k setup. So Fidelity, as I mentioned, will hold the solo 401k funds. And again, today's webinar is surrounding the Mega Backdoor Roth solo 401k strategy using Fidelity in conjunction with my solo 401k. But you can also utilize Schwab if you prefer. We'll do a webinar on that topic too. Or you can use your local bank. So here at my solo 401k financial, you get to choose where to hold the money at. It's your money. So sticking with the Fidelity example here, my solo 401k would be the document provider. Fidelity will provide brokerage accounts for the solo 401k that we offer that allows for the Mega Backdoor Roth strategy. We'll help you open up those brokerage accounts at Fidelity. They can be opened up online, or they can be opened up filling out specific Fidelity forms that we would complete for you. What is more, you don't need to make the contribution and open the brokerage accounts for the solo 401k if the goal is to maximize the Mega Backdoor Roth strategy. You don't have to do that by December 31st of 2025. For example, you can go ahead and set up the plan by December 31st of 2025, which again means you simply sign the plan documents. When you sign the plan documents, that means you've met the deadline. You can have a good rest of the holiday season, not having to worry about having to open the brokerage accounts, making the contributions. All that can happen in 2026. Or you can wait and do everything in 2026 by April 15 or October 15 of 2026. And you're still going to be able to make contributions for 2025. That's voluntary after-tax solo 401k contributions. Of course, there's still plenty of time to get everything set up if you're in a hurry to hit the ground running and getting this all set up. So here's an example of the Mega Backdoor Roth solo 401k strategy. So when you open a solo 401k plan, the plan is sponsored by the self-employed business. In the context of a sole proprietorship, you may have an LLC that's taxed as a sole proprietorship. So the LLC will sponsor the solo 401k, or you may be doing business under your own name where you file a Schedule C and you list your name as the sole proprietorship. That's fine too. That'll be your self-employed business. We would help you open up 3 separate brokerage accounts at Fidelity Investments. You would have a pre-tax solo 401k brokerage account, a Roth solo 401k brokerage account, and a voluntary after-tax solo 401k brokerage account. It's one plan that allows for all these various sources. You're required to have separate holding accounts, aka brokerage accounts, for each source of funds. That doesn't mean you have to make all these contributions every year. And all these features are built into the plan. So whether you open the brokerage accounts now, later, open some now, some later, you're not going to lose that flexibility. So it's not 3 separate solo 401k plans. It's one plan with 3 separate holding accounts, aka brokerage accounts. Here's an example of a 2-participant plan. Many clients are married and both spouses participate in the same plan because they're both self-employed in the same business. So if your self-employed business is an LLC taxed as a sole proprietorship and both spouses work in that same LLC, it would just be one plan. Each of you would have 3 separate holding accounts for a total of 6 brokerage accounts at Fidelity, because you're required to not only separately track each source of funds, but each participant's funds, because a solo 401k, just like a traditional 401k, is a defined contribution plan, meaning you have to separately track each participant's funds and sources. In this case here, each spouse would be a participant in the plan. And of course, regarding the Mega Backdoor Roth Solo 401k strategy, we would help you calculate how much you can contribute to the solo 401k as a voluntary after-tax solo 401k contribution, for example. You would make that contribution into the voluntary after-tax solo 401k bucket. Then you would immediately convert it to the Roth Solo 401k. Then you would complete our online conversion form, which is going to prompt us to issue a Form 1099-R to report the Mega Backdoor Roth strategy to the government. So obviously, when you make that voluntary after-tax solo 401k contribution, it's not going to be deductible. Just like Roth solo 401k contributions, voluntary after-tax solo 401k contributions are not deductible, but the trade-off is that you're going to be able to convert that to the Roth solo 401k. That's not going to be taxable either. There might be some small gains. Those would be taxable, but the basis won't. And then you're going to have funds in that Roth solo 401k resulting in supercharging your Roth Solo 401k retirement funds. You can also convert to the Roth IRA if you prefer. So you would open up a Roth IRA at Fidelity or another firm, or you may already have a Roth IRA. So the Mega Backdoor Roth Solo 401k strategy allows you to convert to the Roth Solo 401k or the Roth IRA. You get to choose. We find most clients like to convert to the Roth Solo 401k because just like Roth IRAs, Roth Solo 401k plans are not subject to required minimum distributions. It used to be that Roth Solo 401ks were subject to required minimum distributions, but not anymore. That hasn't been the case for the last couple of years. So we find that most clients like to keep the funds within the plan by converting to the Roth Solo 401k. But again, it's your option. You get to choose. That's why we have a lot of clients, because here at my Solo 401k Financial, we let you choose what you want to do with your Solo 401k plan as long as it falls within the regulations. And that's why we're here, to help educate you on the rules and regulations, not only setting up the account, but going forward. And that's covered in our annual fee. So if you have a question about how to process a conversion, if you want to make an investment, such as real estate, private equity, we can review those investment documents for compliance purposes. We're not going to advise on what to invest in. We're not financial advisors. We're solo 401k providers and compliance providers. We stick with what we do best. As a matter of fact, most of our clients are from the institutional side. We got advisors that come over to us and utilize our services, and then they clear through their custodian. So we're the plan provider. The advisor does what they do best, which is advise the client, knowing that we're going to handle the compliance matters for the plan, and we're going to be the plan provider. Okay, let's take a look at some questions here, and then we'll continue. Let's see here. Oh, let's see here. I accidentally submitted my application without final review page. I was only testing the form with my details. Please send me a copy of what I submitted for review. Allow edits before payments. So usually you need to complete a new online application, in short, listing the correct information. And then after that, you'll be prompted to make payment, but you haven't paid yet, so you can disregard that test application you submitted. All right, let's see here. You make these requests by sending us an email or submitting a support ticket on our website, or you can schedule calls as well. We don't have a 1-800 hotline like other big brokerage firms. Remember, we're a boutique firm where we're handling the compliance matters. So we don't have a 1-800 hotline, but all our calls are scheduled. That way we can make sure you speak to the right compliance professional. You can also email us, and we'll respond with the email outlining the full details of all your compliance matters. Let me provide you with the support, a link to our support ticket page. Give me a moment here. All right, take a look at that support ticket there. All right, and that support ticket, you can submit a ticket if you want us to add the auto contribution credit to your plan if you're an existing client, because the auto contribution credit wasn't available till January 1st of 2024 and after, but it can be added to existing plans from December 31st of 2023 and prior. We'll talk more about the auto contribution credit in a minute here. Let's see here. Okay, we'll come back and take a look at some more questions here in a minute. Go ahead and continue to chat your questions over and we'll get to them here. So we're talking about the Mega Backdoor Roth Solo 401k strategy. This is a hot topic this time of year. Let's pick up where we left off. So we talked about, so what is the Mega Backdoor Roth? What is the Mega Backdoor Roth? Well, it's a strategy using voluntary after-tax contributions that you then convert to the Roth Solo 401k or the Roth IRA. It allows sole proprietors to reach the full overall limit, which is $70,000 for tax year 2025. Most brokerage firms do not support the Mega Backdoor Roth, but they will provide brokerage accounts, like Fidelity will provide brokerage accounts for a solo 401k from my solo 401k financial that allows for the Mega Backdoor Roth strategy. And when you make the voluntary after-tax solo 401k contribution, you need to base it on your net self-employment income. So today we're talking about a sole proprietorship or an LLC tax as a sole proprietorship. So the starting figure for calculating the voluntary after-tax solo 401k contribution as part of the Mega Backdoor Roth strategy is you need to use line 31 of your Schedule C. That's the net profit line. Then you plug that line onto our calculator, and then you have to subtract 1/2 of self-employment income tax from that line 31 figure. Our calculator will subtract that 1/2 of self-employment income tax from that figure. Now, of course, again, today's main topic is regarding sole proprietorships, Mega Backdoor Roth Solo 401k setup at Fidelity. But if you have an S Corp or a partnership and you're self-employed, you can also set up a solo 401k plan. If it's an S corporation or a C corporation for that matter, the starting figure for the Mega Backdoor Roth Solo 401k calculation is going to be box 1 of the W-2, the gross wages. If it's a partnership, it's going to be line 14 with the code A of the Schedule K1. So for tax year 2025, the overall contribution limit for the Mega Backdoor Roth Solo 401k strategy is $70,000. That's it. You cannot contribute the catch-up contribution for those who are age 50 or older, amount of $7,500. That cannot go to the voluntary after-tax solo 401k bucket. So that's very important to understand that the Mega Backdoor Roth Solo 401k strategy only consists of the overall limit, which is $70,000 for tax year 2025. The catch-up contributions, if your business is a sole proprietorship, would flow to the Roth Solo 401k directly. So you can contribute that $7,500 directly to the Roth Solo 401k holding account. If you're age 60, 61, 62, or 63, the super catch-up of $11,250 can flow directly to the Roth Solo 401k bucket as well, or to the pre-tax bucket for that matter. So as an example, let me pull up my image here that I want to share with you. As an example here, you would make the voluntary after-tax solo 401k contribution to this bucket right here, the voluntary after-tax solo 401k. That's where you would deposit the full $70,000. If you're age 50 or older and you qualify for the $7,500 catch-up contribution, you would deposit that directly to the Roth Solo 401k or to the pre-tax solo 401k. If you qualify for the super catch-up, you would contribute that $11,250 directly to the Roth Solo 401k or the pre-tax solo 401k bucket. So in sum, catch-up contributions can never be used as part of the Mega Backdoor Roth strategy. So we get that question quite a bit. So make note of that. Okay. Let's get back to. So here's an example here of the 2025 solo 401k contribution limits. The overall limit, again, for the Mega Backdoor Roth strategy is $70,000. If you're age 50 or older, you got that catch-up contribution of $7,500. That would flow directly to the Roth Solo 401k bucket or the pre-tax Solo 401k bucket. You get to choose. If you're age 60 through 63, you can make the super catch-up contribution of $11,250 to the Roth Solo 401k bucket or the pre-tax Solo 401k bucket. Obviously, you're not going to be able to also do a $7,500 contribution. It's either the super catch-up or the $7,500 for those who are age 60 through 63. Let's talk about the magic number needed to maximize your Mega Backdoor Roth Solo 401k for tax year 2025. We get this question quite a bit too. So clients often ask, I've got a solo IRA. Well, I usually scratch my head when they say solo IRA, but I know they mean solo 401k. Oftentimes, individuals use the word solo IRA to refer to a solo 401k, but there's no such thing as a solo IRA. It's either a solo 401k or an IRA, but I understand. So if you're under age 50, the maximum line 31 Schedule C self-employment income that you're going to need is $75,322 for tax year 2025. And you're going to be able to treat that entire, and then the reason you need that amount of $75,322 is because you have to subtract 1/2 of self-employment income tax from line 31. And if you report that amount, you're going to be able to contribute a total of $70,000 to the voluntary after-tax solo 401k bucket, and then convert it to the Roth Solo 401k or the Roth IRA. And that's all. You wouldn't be able to contribute any more than that. Now, if you're age 50 through 59, you can qualify for that catch-up contribution. So you need to report the total of $83,392 of line 31 on your Schedule C self-employed business. And that way, you're going to be able to contribute $70,000 as a voluntary after-tax solo 401k contribution, and then convert it to the Roth Solo 401k. And then the $7,500 catch-up would flow to the Roth Solo 401k or the pre-tax Solo 401k. If you're age 60 through 63, your magic number is going to be $87,427 of line 31 Schedule C. Then you can contribute $70,000 to the voluntary after-tax Solo 401k bucket, move it to the Roth Solo 401k, and then the super catch-up of $11,250. You can deposit that to the Roth Solo 401k or the pre-tax Solo 401k. Obviously, there's different ways to apply these contributions, but the key here is that these are your magic numbers, number one. Number two, you have to have the required self-employment income to support the contribution. And it's got to be based on your earned income from self-employment activity. It cannot be investment income. It cannot be capital gains income. It's got to be earned income from self-employment activity. That's why, again, today's main topic is the sole proprietorship deadline Mega Backdoor Roth Solo 401k. If you use my Solo 401k in conjunction with Fidelity Investments to hold the funds, and it's our plan that allows for the Mega Backdoor Roth strategy. So why can't I do this directly at Fidelity or Schwab? Well, they've made the decision, and I can understand why. It's a lot of work educating individuals on the Mega Backdoor Roth. It's a lot of work doing the reporting. So Fidelity and Schwab don't make money off of educating individuals on the Mega Backdoor Roth strategy. They make money off of your deposits. So why go through that headache and offering the Mega Backdoor Roth strategy if they can utilize my Solo 401k financial for that, and they can still hold the funds at Fidelity or Schwab? Okay, let's take a look at some questions here. Will you send us an email with a checklist of things we may need to request for document preparation from you annually? Well, there's no checklist because we'll automatically provide you with the required IRS plan updates. So the onus falls on us. You're not going to have to track anything. We're the ones that will draft and provide that to you for your records or your signature? Good question. If I open a solo 401k with you, will you help me to claim the $1,500 tax credit? So it's very easy to claim the tax credit. We have a video walkthrough and we have a PowerPoint slide. Let's jump to the auto contribution credit. It's essentially, give me a moment here. So the auto contribution credit, it's a dollar for dollar tax credit. Now don't confuse the auto contribution credit with the tax credit. They're two different things. Let me pull up an article that we published on this topic, because a lot of CPAs and tax professionals out there confuse the auto contribution solo 401k credit with the tax credit. They're very similar, but the auto contribution credit applies to solo 401k plans. The tax credit does not. Let me share a good article that we did on this topic. Take a look at this article right here while I go through these slides. That's a great article that our attorney put together that talks about the auto contribution credit. So with the auto contribution credit, the cost to open a solo 401k and maintain a solo 401k is practically free for many years to come. And it's a dollar for dollar credit. So it reduces your taxable business income on a dollar for dollar basis. You need to open a solo 401k plan from a provider such as my solo 401k financial, whose plan offers the auto contribution credit along with the applicable schedules. You can actually opt out of contributing, and you can still contribute up to the overall limit of $70,000, for example, or higher if you're age 50 or older. So in short, you're not required to contribute in order to utilize the auto contribution credit. So take advantage. And you're still going to be able to contribute if you want. Now, you're going to claim this credit over a 3-year period for a total of $1,500. So $500 per year for 3 years. You're going to file Form 8881 a total of 3 times. So once each year for a total of 3 years. It's an attachment to your Form 1040. Form 8881 probably takes 5 minutes to complete. There's only a certain section that has to be filled out. Again, we've got a PowerPoint and a video, that instructional video that shows you how to fill it out. A lot of our clients use TurboTax to file their taxes. So we have instructions on how to file it through TurboTax as well. Okay. So if this information is helping you feel more confident about your future, please take a moment to like and subscribe. It tells the community that this information is important and it helps others to find this information. Subscribe and also guarantees that you receive notifications of all our crucial content that we deliver every day. For example, if you subscribe to our YouTube channel, you can access over 1,000 videos we have there. We also have a my community page. There's actually a section where it talks about the auto contribution credit and how to file through the Intuit. If you file your taxes through Intuit, so TurboTax. If you're a financial advisor, you can join the community for free, or you don't have to be an advisor, you can join for free regardless. But if you're an advisor, you can post guest blog posts and link it back to your company's website to see what services you offer. And the 32,000 plus members in our community may visit your website and utilize your services. Same thing if you're an estate planner, CPA, any type of professional. Many of our 32,000 plus members will oftentimes reach out for other services, such as financial advice, estate planning, insurance services, real estate. So there's a wealth of information on my community, and it's free to join. Okay, let's take a look at some more questions here, and then we'll keep going here. So If you've got some specific questions, go ahead and submit a support ticket, and we can schedule a call, or you can schedule a call on our website. We don't have a 1-800 hotline, for example. We don't hold our clients' money. Our clients get to choose where they hold their money at. Just like a boutique firm, like a financial firm or a CPA firm, all our calls are scheduled so we can make sure you speak to the appropriate person regarding your specific questions. And then we also will follow up with an email outlining all the specifics. Here's a question here. Are you suggesting conversion from after-tax 401k to Roth 401k? Why not just contribute to the Roth 401k to begin with? So the Mega Backdoor Roth strategy is a way to get more Roth 401k in your account. Because typically with the solo 401k or even a traditional 401k, you can make employee Roth solo 401k contributions, but you can only contribute $23,500 as an employee Roth solo 401k contribution. So individuals like to utilize the Mega Backdoor Roth because on top of that $23,500 Roth solo 401k contribution that they can make the difference up to the $70,000 limit as a voluntary after-tax solo 401k contribution, and then immediately convert it to the Roth solo 401k. So the purpose of the voluntary after-tax solo 401k is to get a total of $70,000 as Roth solo 401k funds into your plan. So that's the main reason individuals utilize the Mega Backdoor Roth. What is more, let's say that you have two 401k plans. Let's say you work for Microsoft or NVIDIA, or let's say you work at Best Buy. So you're an employee of the Best Buy corporation that sponsors a 401k. Let's say you also have a side business. So you're a real go-getter. You've got a side business and you open a solo 401k plan as well. Let's say that you maximize your contributions to your Best Buy 401k. So you contribute $23,500 to your Best Buy 401k. Best Buy also makes an employer profit sharing contribution. Now you've contributed a total of $70,000, which is the overall limit for tax year 2025, to your Best Buy 401k. Well, by utilizing the Mega Backdoor Roth strategy for your solo 401k, even though you've already maximized your contributions to your Best Buy 401k, you're still going to be able to make a $70,000 voluntary after-tax solo 401k contribution to your solo 401k plan based on your earned income from your self-employed business. And then you can immediately convert that $70,000 to the Roth solo 401k plan. So now, in addition to contributing to your daytime Best Buy or Apple 401k plan, you've contributed to your solo 401k $70,000 in voluntary after-tax solo 401k contributions. So now you've contributed $140,000 between two plans, your daytime employer 401k and your solo 401k. So that's another reason why clients like to utilize the Mega Backdoor Roth, is for those who are high income earners. For example, we have a lot of attorney and doctor clients who tend to be high income earners. They'll utilize the Mega Backdoor Roth solo 401k for their side business, even though they maximized all their contributions to their daytime 401k. The Mega Backdoor Roth strategy is not impacted by any contribution that you make to your daytime job 401k. So talk about really supercharging your retirement savings by contributing to both your daytime 401k and your solo 401k. So I mean, now keep in mind though, there's an exception. If your daytime job is a 403b, you do have to take into account the contributions that you make to your 403b plan, but that doesn't apply to a daytime employer 401k. The aggregation rules don't apply. The contribution aggregation rules do not apply. So those are some good items to understand. So some key takeaways here. Your magic number depends on what type of contributions you want to maximize: employee only, employee and employer, or maximizing Roth. Self-employment compensation for sole proprietors is calculated as line 31 of the Schedule C, minus 1/2 of self-employment income tax. For tax year 2025, you can contribute up to $70,000 to a solo 401k plus catch-up contributions if eligible. Having a daytime job with a 401k reduces employee contribution limit, but not your employer or voluntary after-tax solo 401k contributions unless your daytime job offers a 403b. So those are some good things to keep in mind. All right, let's see if we have some more questions here. Here's a question here from, we've got a question here from Juan. Can I contribute to both after-tax account and a SIP IRA each year to make things simple? Yeah, the regulations allow you to contribute to both a solo 401k and a SIP IRA. However, you need to aggregate your contributions that you make to the SIP IRA to your solo 401k if the SIP IRA is also for your self-employed business. So a SIP IRA only allows for employer profit-sharing contributions. That's why we find that a lot of clients who have a SIP IRA, they will transfer that SIP IRA to the solo 401k plan. Why? Because the solo 401k plan allows for employer contributions as well as employee contributions and voluntary after-tax contributions. So why also have a SIP IRA that only allows for employer contributions where the solo 401k already allows for it? But if you do have a SIP IRA and you want to keep that SIP IRA, just keep in mind that when you're making contributions to the solo 401k plan, that the contributions to that SIP IRA will impact the amount that you can contribute to the solo 401k plan. So yes, you can choose to make the employer contributions to the SIP IRA and then make the employee contributions to the solo 401k in conjunction with the voluntary after-tax solo 401k contributions. All right, so let's continue here. So we talked about this slide here. So again, it's going to be best to adopt the solo 401k plan by December 31st of 2025 so that you don't forget. But technically, you have until April 15th of 2026 or October 15th of 2026 if you file a business tax return extension for your sole proprietorship. If you open the solo 401k plan, now this is regarding making voluntary after-tax solo 401k contributions, these deadlines. Employee contributions have different deadlines. We're honing in on the Mega Backdoor Roth solo 401k right now. So if you set up a solo 401k plan now in 2025, keep in mind, all you need to do is sign the plan documents and your plan will be effective for tax year 2025. And then next year in 2026, you can both open the holding accounts and make the contributions, and we'll shepherd you through that entire process. All right. So that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future depends on it. Please like and subscribe so that we can keep building this community. We'll be back here in a couple hours with more crucial content. We go live every day, twice a day, once at 10 a.m. Pacific time and a second time at 1 p.m. Pacific time. So join us then if we didn't get to all your questions, and we can answer them at that time. Until next time, have a good rest of the day.